look at this, folks. We use that same trend line that's been giving us this support area. And if we can break above here, that we're going to start to see a move up towards 5,000 right up there. We take the same trend line just like we did on gold. We're going to use a parallel this time. We're bringing it up towards that high. Take a look at this, guys, right up there at $100 silver.
51, 5,200. That's the next blow off phase, the next emotional phase where the general public who is not in precious metals will most likely buy at 51, 5,200 range. Volume will be huge. And then of course it goes into a big correction. And we've talked about how silver has that potential. It's got the volatility, which is always a warning sign, but we're in a strong uptrend and we're in a bubble parabolic phase, and we just continue to ride that until the bubble bursts. And our upside target potentially is 106 for silver.
Gold has just shattered the $4,600 barrier for the first time in history, while silver is screaming toward $86 per ounce. This explosive rally is fueled by an unprecedented crisis as the DOJ serves grand jury subpoenas to Fed Chair Jerome Powell, sparking fears over the future of U.S. financial independence. In this video, master trader Gareth Soloway strips away the hype to reveal what the charts actually signal for this new leg higher. Using precise technical levels, he explains why a daily close above $4,585 for gold and $84 for silver could open the door to a massive move toward $5,000 and $100. But are we witnessing a sustainable breakout or a dangerous overextension? Watch until the end to see the exact trend lines Gareth is using to be the casino in this volatile market. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
Now, in today's video, we're going to deep dive into gold and silver. Are they just breaking out and headed towards 5,000 on gold and $100 on silver? We're going to look at the charts and see what the charts are telling us. What's the unconditional kind of neutral view based on the charts, not based on hype and narratives. Take a look at gold. Now, gold is trading up. It is making a new all-time high. It is piercing this trend line. This trend line is absolutely key based on a daily close today. A daily close above, which we currently are on gold, would solidify, in my opinion, a new leg higher on gold that should take us towards the $5,000 level. All right, I just want to show you this real quick. So based on that, what we have is if we take the same trend line, which has been monitoring, we've been monitoring this for gold and silver, and we take that and we do a parallel, take a look at this, up to this upper level, look at where it goes. Right up to the $5,000 level. So when you say, well, why did Gareth pick the arbitrary number? Like, is it just because it's a round even number at 5,000? The answer is no. There's nothing in technical analysis that should be a guess, right? It should have probability. Now, it doesn't mean it's going to be correct, as we know, because again, charts give you probabilities. It's like going into a casino, the odds favor the house, right? Not the gambler. That's what we want to be. We want to be the casino, not the gambler in the scenario. And that's why following the charts is so key. But look at this, folks. We use that same trend line that's been giving us this support area. And if we can break above here and close, let's watch today. Do we get a close basically above, let's say 45.85 or so? If we can, then the odds start to shift pretty heavily that we're going to start to see a move up towards 5,000 right up there, which would be our next headline resistance. Now, just as a little side note here, we all know what's going on. Why is gold rallying so sharply today, up almost 2%? And the answer is this. Jerome Powell, the Fed chair, has revealed that the DOJ is investigating the Federal Reserve, there's going to be subpoenas, potentially prosecutions. Silver is breaking above this level as well. So this was remember, we had this wedge. In my last video, we went over this wedge on silver. It kept hammering, then popped, then hammered, then is popping again and making a new high. Now, the same thing I said goes for gold here. Gold, my friends, just like we said, on silver here, any close above this line opens the door. It negates the bearishness of this reversal candle. And remember, that's what I've been saying all the time. I said, listen, anything in here is neutral to bearish unless we can take out this high. Now that negates, if we get, again, we have to see, do we get a daily close above here? Basically a daily close above $84 per ounce. If that happens, then this opens the door. The probabilities begin to swing strongly back towards the upside on the chart of silver. Now, where could silver go? Let's use the same technique we just used. We take the same trend line just like we did on gold. We're going to use a parallel this time. We're bringing it up towards that high. Take a look at this, guys. Where is that? Right up there at $100 silver. Now, listen, if we zoom up straight up, obviously that's a little bit lower, right? I mean, here would be 94. But the idea is if it takes a little bit of time going out to the end of January, by the end of January, this trend line, this parallel will be at $100 silver. This is incredible, folks. I mean, we are witnessing single-handedly the metals roaring like we haven't seen it. This is almost getting to be bigger than 1979. And again, what you're seeing in terms of the trust in the U.S. financial system, what people have been talking about for the last 5 years because of the U.S. debt. Now you have the president basically going after, potentially legally and in terms of subpoenaing and prosecuting these Federal Reserve players. It is all a strong arm to get more control. And when you have a president that controls the financial bank, essentially, of the U.S., we essentially become places like Venezuela and other places.
Market chaos is officially here as money flees equities and the dollar, seeking refuge in a massive precious metals breakout. With global currencies in flux and governments facing upheaval, a global reset appears to be brewing, driving the markets into a high-stakes, emotional blow-off phase. Technical analyst Chris Vermeulen breaks down this parabolic move, warning that while the trend is up, a FOMO phase is looming that could trap late buyers before a sharp correction. He explains his strategy for riding these cycle lows in the S&P 500 while staying long on metals as they pick up unprecedented speed. Can you stomach the volatility of this asset swing, or is the bubble about to burst? Now, let's hear directly from Chris Vermeulen.
Looking at the markets, we're going to have, I think, some pretty good price action today and volatility this week. We have money flowing out of equities today, out of the dollar, and we're seeing precious metals rocket higher. I will start off real quick here with the equities market. Overall, the S&P 500, when we look at the short-term chart, has dipped into these oversold levels, these cycle lows and support levels. Each time we've seen a bounce moving out of that. We talked about that last week. And of course, the market in the S&P 500 hit some all-time highs. Today, we're seeing the markets pull back about 0.5% on average. So pulling back a little bit from all-time highs, which is not a big deal. Really, it's what happens. You poke to a new high, you see some selling step in. So overall, we're letting the underlying trends, which are to the upside, 150-day, the 50, the 20, the 5, everything is layered. The trend is still up, and really we just ride this market to all-time highs. No matter how bearish we may be on the future, we continue to be long and ride this market higher with a game plan for when and if things turn around. Now, if we take a look at the dollar, we're seeing a sharp pullback. You can see on the daily chart here, we got a sharp pullback. It definitely had a pop and a breakout and a squeeze higher right into resistance, short-term resistance level here. I'm not sure where that falls on the Fibonacci level. If we take a look at this low, this pivot high, this pivot low, pretty much we came up, we hit that 100% level. Also the significant resistance level where peaks and troughs have been hit before, and it's reversed back down. So that's typical. You know, you usually see the market run up, it'll hit some levels, and then of course it pulls back. So we'll just, if we go from this low to this high using a Fibonacci retracement, we can say, okay, well, the dollar index is probably going to pull back into this 318 or the 50% level, which it is technically entering in now. And so we'll just let it work itself out. It could very easily pull back, consolidate here, and then start another big run for all we know. But again, one bar at a time. We don't predict turning points or trade turning points that we think are going to happen. We just follow the price. So the big move with dollar down today and money flowing out of stocks, it is looking for safety and it is piling into metals. Gold up 2.6%, breaking out to all-time highs again. We are long gold. Pretty exciting to see it push up. And we've been talking about how we could see a very big parabolic move. Metals are already in a parabolic move when you look at the long-term charts, but overall we're ready for another one of these, I think, legs to the upside to 51, 5200. That's the next blow-off phase, the next emotional phase where the general public who is not in precious metals will most likely buy at 51, 5200 range. Volume will be huge, and then of course it goes into a big correction. Very similar to this. This is when you get the FOMO phase, and that's when it pulls back sharply and tries to either shake them out or wait them out, and that's what the market loves to do. So hopefully we see precious metals continue to rocket higher, and we're long metals, and that's what we want. If we take a look at silver, up 7.5%, breaking to new all-time highs, picking up speed again. We've talked about how silver has that potential. It's got the volatility, which is always a warning sign, but we're in a strong uptrend and we're in a bubble parabolic phase, and we just continue to ride that until the bubble bursts. And our upside target potentially is 106 for silver. At the rate that it's moving, it could be there very quickly. All very exciting stuff for anybody who holds physical metals and precious metals on the side, outside of our other strategies. It is definitely an exciting time. Again, this blow-off phase in the metals is a huge warning of all kinds of things slowly brewing, that we're going to have some global reset. There's a lot of things happening between currencies and countries and governments and all kinds of stuff being overthrown around the world. So there's definitely this chaos, and that is the sign that there's going to be some big changes and big asset swings.
As both Gareth Soloway and Chris Vermeulen highlight, we are navigating a historic financial shift where technical charts meet global macro instability. Whether you are eyeing Gareth's casino strategy to master the trend lines or Chris's warning about the looming FOMO correction, the message is clear. The era of passive investing is being tested. This isn't just a rally, it's a fundamental revaluation of safety in an uncertain world. Are you prepared for the next leg higher, or will the global reset catch your portfolio off guard? Share your thoughts in the comments section below. If you found their breakdown helpful and want to stay ahead of these historic market moves, make sure to like, subscribe, and turn on notifications so you never miss an update. Your support helps the channel grow and keeps you informed when the markets shift next.